All right, everybody, welcome to the video here. Today we're going to be recognizing how to find stop hunts, and when we find stop hunts, how to take maximum advantage of those. We've got gold here and it is live at this time. And of course, if you're watching this in a recording, welcome, and hopefully you enjoy and subscribe to the stream. There's a lot to unpack here, but firstly, I want to talk about when stop hunts happen and what this means for our trades. Straight away, we see the closure that happened below this previous support zone. This is really key because this happens on all time frames. It happens on the 2 hour, happens on the 4 hour, happens on the 8 hour. We then get a massive confirmation boost in terms of the opposite direction. And what this does is it triggers sell positions, but it also triggers a lot of stop losses because a lot of people will have stop losses underneath these previous wicks. Now, when you get this incredible full-on momentum rejection, if you go over to something like a daily here and you see what we saw on gold, which is a huge bullish hammer, or some people will know it as a pin bar, what this is telling us is that it was a stop hunt. It's confirming the opposite direction off previous resistance, so you know it was at an incredibly critical support resistance area. And when we see a follow-up like this with a long leg doji, or even followed up momentum with a new bullish high, we know that the market has completely reversed. It has taken the ultimate amount of money from the traders, which is of course what we're looking for here. It's all about Wall Street taking maximum advantage. If you look at Wyckoff theories, if you look at a lot of theories out there on technical analysis, it's all about taking maximum extraction. And this is a classic case of a stop hunt with a full reversal, with then, of course, the movement through. So I want to take this one step further because how do you get into trades like this? And I want to talk to you guys about one of the things that I always look for. Indecision at the peak and then a decision being made is one of my critical things that I look for breakouts. So here we have a bullish hammer, 2 hour coming through. We have a long leg doji, which is an indecision candle. Effectively, we have a high, we have a low point, and then we have the middle point right here. And what you'll notice is that it's not so much the next candle here that pushes through the buys, but it's the candle that goes above this long leg doji and closes, which is this one here. This signal is incredibly strong. And what we're seeing live right now at the time of this recording is a huge amount of participation in the gold trade because this triggers the buys. This triggers basically maximum extraction has occurred. We've taken out the stops down here. We've pushed in the opposite direction. We've done another nasty stop hunt. And right here, right now, we're taking out all the shorter stop losses. So once you go past these two highs here, what are you doing? You're triggering all of those stop losses. They're being converted into buys. And then we start to see that max huge participation level. And I think over the last couple of years, this has been faster than we've ever seen it. So the speed at which these extractions are happening and the speed at which this participation is happening due to algorithms in the market is incredibly quick. And I expect this now to go to the next participation zone. And that's very easy for us to go and spot because what we do is we use the higher level technical analysis. And straight away, you'll see somewhere around this 1840 to 1845 zone is where we expect them to participate too. So whether it happens in one giant candle or whether it happens in pullback candles a long time, this is a high statistical chance and it has all the hallmarks of a stop hunt, of another big extraction going on here, and of course a follow-on effect. Hopefully that helps, guys, and we'll see you in the next video.